Appen down by 8% today upon the quarter result and also ahead of the full year result. And Zip's down 20%, even though it's reported a very positive result. The question is it time to buy those two stocks now that we have been avoiding for some time? 3 weeks ago, I put a video about Zip here in this channel. If you missed, just go and have a look, which I said very clearly that Zip was overvalued and the chart formation was highlighting a potential downtrend formation, a change of behavior, because the RSI was trending down. So we're gonna check what the hell is going on with Zip today and Appen and see whether we could potentially be buying those stocks, and if we could, what would it be the best entry price for Appen and Zip? Let's have a look. My name is Les, I'm Chief Analyst of BG Trading Australia. This video is not a financial advice, just as from BG Trading, sharing with you how we apply BGS 20 and BG Trading strategies to chase 20 to 40% profit in some certain stocks that we believe has huge upside and little downside. Obviously, we use very tight stop losses. We don't get right all the time, but when we get right, our trades sometimes even exceed 40%. Trades that we've done with Mesoblast, with Zip, with Appen, all around 80% profit, and many other trades that I don't remember right now. Now, the reason I'm putting this video is because Zip has been incredibly profitable stock for us here at BG Trading. If you are following this channel for over 2 years now, you will know that we have been very, very profitable with the Zip together with our VIP members. And we have been trading Zip over and over again, especially during this uptrend. But the problem was 3 weeks ago, when I post this video, a lot of people been asking why we been avoiding Zip since it was one of our favorite stock. The simple reason was Zip was trading at high valuations, and also the chart formation was pointing for a potential downturn. Most of this rally in Zip has been generated by the hype of Fed cutting rates in the US. Since RBA hasn't yet cut any rates so far, people have been asking, what if RBA cut rates? Well, if RBA cut rates, I don't think that will have any material impact in Zip, at least on the stock performance, as most of the warehouse funding for Zip will be attached to US interest rates. Now, the key for us is understand where these stocks heading towards and whether we should be buying. So the chart formation continues to show further downside for Zip. And the reason we looked into avoiding Zip for since December was because this bearish divergence here from the uptrend, completing its formation and testing the downtrend on the RSI multiple times. There was clear highlighting the potential crash on the stock. And that happened here in December, where the stock fell from $3.50 towards $2.70. But then we have it once again test this downtrend, and then the stock fell again, and then recently, just yesterday and today, tested this downtrend again, and we have this huge crash right here where ZIP now as 11:22 Australian East time, trading 20% below yesterday closing price at $2.60. Now, provided the chart formation is showing a bearish trend for ZIP, at least in the short term, we want to take a look quickly what exactly came into this second quarter report for FY25 that has spooked the market. And according to my analysis on this report, every single key fundamental metrics is actually positive. There's nothing wrong with this. Showing that ZIP still into uptrend, is still improving the cash EBITDA, which has just improved 50% versus the same corresponding period back in 2024, which is an incredibly good result in my opinion. Modest growth of 20% on the revenue, which is still a pretty good growth. And if you can see now in this quarter, the company has reported $269 million revenue, which if the next few quarters come in line to this quarter, we most likely will see ZIP reporting over $1 billion revenue, which will be the record revenue so far in this particular company. ZIP is now in the best fundamental shape ever, even better when the stock has reached $14 back in 2021 by memory. But again, back in 2021, ZIP reached $14 because interest rates was coming down over and over again and reached the historic lows of 0.25%. And we probably never going to see that again. And the rally was on the back of these multiple interest rates hikes. And the rally was on the back of those multiple interest rates cut. Now we had few interest rate cut by Fed, but Fed has paused its cut, and most likely, at least in my opinion, based on the macroeconomic view for the next 12 months, most likely we won't see any further rate cut. Now, it's fair to say that ZIP is a long, it is a stock that can be now traded without the influence of macroeconomic hypes based on interest rate cut. Because that, we need to look at ZIP as a normal stock using our strategy and looking into technically discounted price points. Now, if you ask me, where is the technically discounted price right now for ZIP? If you look into this pink line, the last time the ZIP was trading technically discounted price was at the 52 cents. But the moving average, it moves over time. And now is precisely at $2.02. So it's fair to say, according to BGS 20 strategy, that if we want to position ourselves into ZIP again at technically discounted price and make fantastic trades that match the trades that we've done in the past, we really want to be looking at buying ZIP under this particular pink line level, under the SMA 250 moving average. And that will require patience and precision. We don't want to be buying now because I still think we could see further fall for the reasons I've just explained in this video, even though ZIP is reporting positively. So we either have to see the price trading under these levels, or we need to see a substantial reversal confirmation or indication into this chart, which we haven't seen yet. So if we look into a similar player in the field, Sezzle, that has rallied far higher than Zip and is still reporting positive results quarter on quarter. The stock has come down impressively 54%. Again, that is because the stock has been overbought. So we see 2,000% rise in Sezzle, and the hype has faded and now is trading at its normal, close to SMA 250, as you can see right there. SMA 250 at $167 and is trading at $240. So now Zip is similar position. Let's take a look how much has Zip been falling since recent highs. So pretty much 28%. So in my opinion, based on my past experience in previous analysis, I believe there is room for further fall. I wouldn't be looking into support and resistance at this stage, but I would be looking at either a reversal, a strong reversal candle right there, which we're not seeing today, at least not so far. Unless this reverses into a green candle, then there would be a strong reversal candle. And even if we miss out on this one, so if this reversal is consolidated into a green candle closing around $3, then I would not hesitate to buy Zip again. That would give me a very, very strong technical confirmation that we are heading towards the high side once again. But now, without that confirmation, and based on the macroeconomic facts that I have just mentioned, and the fact that fundamentally Zip is at formal levels, at higher levels, so I'll just leave Zip for now. At least for now, even if I miss out. So as you can see, we are trading stocks that are doing incredibly well, like Mesoblast. Mesoblast is a stock that we also covered into the last video when I told my audience to caution about Zip. So Mesoblast has done incredibly well. Some of our VIP members have chance to lock another 22% today. Full disclosure, we are going to keep holding Mesoblast. I'm not going to analyze Mesoblast right here, but we're going to keep holding. So the bottom line is saying that there are better opportunities out there now than Zip, in our opinion. All right, and we rather gamble into a stock that is trading technically discounted price, but is still showing strong fundamental improvements year on year, than a stock that is still at FOMO area, showing in some strong bearish signs, and that could fall further. So that is Zip. Now let's take a look at Appen, APX. So Appen is a stock that we traded. Last trade we locked to 80% profit with our VP members, and this is down by 9%. Let's have a look. Last analysis that we done with Appen, we forecasted based on our projection, based on the last 3 quarter results, the Appen was going to be reporting a net loss for the full year. The full year report will only be released, I think, 25th of February. So what we have today was the quarter result for Appen, and interesting enough, and I would say unfortunately for Appen holders, Appen hasn't really taken advantage of this AI revolution. At least not in the pace that the other AI stocks are growing. So revenue was down by 7%, which means it still haven't healed its revenue from the loss of Google account, which was huge. And then obviously they highlight on the fact that excluding Google, revenue has grown 37%, but for a growth stock into the hottest sector in the market at the moment, it should be growing exponentially, far higher than 37% without Google account. So that fades a little bit my confidence of buying Appen at the current levels, right? And also, I'm worried about Appen net loss level to be reported next month. So if you are our VIP members, we have been sharing our thoughts that we believe that Appen could have been traded before the reports, this report and the full year report, but I wouldn't be trading right now if you haven't done a trade to buy right now in speculation of the full year report to be positive, because I still now, based on this quarter report, we still believe that Appen will be reporting a net loss. Our estimation here, we are expecting for the net loss for the full year to be around $14 million loss. And that could trigger further sell-off. That's why in our last trade here, this is just sharing how we present our trades to our VIP members. So there was this analysis was built in November 6th. So some of our members had the opportunity to buy Appen at $1.90, $2 and locking 25%, and even as Appen reach our target $3, they could have locked another 50% profit right there. So essentially, what we said the last time is that trade the Appen before the report. So once the report comes, or when it's very, very close to the report to be announced, not to trade Appen, because this projection could trigger a sell-off, right? So the quarter was good, but not good enough, and obviously they triggered the sell-off. But the full year could even trigger a crash right there if comes in line to our projection of a $14 million net loss for the full year. So let's take a look at the chart again. Appen is still trading at formal levels, right above the SMA 250. Ideally, I would love to be buying Appen again at or under this pink line, exactly the same I mentioned with Zip. There is what we call also a bearish divergence, kind of a bearish formation, giving or taking here with the RSI, which worries me a little bit as well. It's kind of not showing any clear direction now, and I would just be careful with Appen because the growth pace for Appen is not increasing, not accelerating in a way that we would like to see in order to see further gains for Appen. My goal would be, as soon as Appen falls towards $1.20 or close to this level, that's when I would potentially be enticed to buy Appen again. At the moment, I won't be touching in Appen or Zip until our entry prices are realized. Hope this was valuable. It's a quick overview of Zip and Appen. Let us know if you agree or not with our view on those two stocks. And if you are interested to look into our VIP membership program and have access to our analysis, entry details, and targets, go to bgtrading.com.au and you will see all our information right there. Thanks for watching. See you in the next video. Bye.